move on to the big story of the day, and that without doubt is oil prices that have been skyrocketing up 20-25%. What we're seeing in a matter of days is what we would have normally seen in a matter of weeks, months and years. Prices have now soared past $115. In fact, as we speak, at about $112 dollars a barrel mark. Now, let's go across to Sonal Bhutra, who's combined the impact that these high oil prices could have across various sectors and stocks. Sonal.
Thank you so much for that. Well, yes, the impact will be seen across sectors. Now, do remember, India receives around 2.5 to 2.7 million barrels per day of oil from the Strait of Hormuz and around 30% of LNG via the Strait as well. So these are inputs for a lot of segments, and that's how the impact will come by. Let's start with the oil and gas space itself, because ONGC and Oil India, of course, if crude oil prices rise, it will be positive for them because they are oil producers as well. However, do remember, they will benefit only if there is no windfall tax this time around, something that we saw 3 years back because of high crude oil prices. For oil marketing companies, remember diesel and gasoline prices or refining margins, they turn negative if crude is around that $75 to $82 per barrel mark, if retail prices are not increased. And if those prices are not increased, they will have negative margins in the marketing segment. The biggest impact will be on HPCL because they have the largest exposure to marketing segment, followed by IOCL. But BPCL could be resilient because of a balanced mix, while Reliance Industries will tend to benefit in their refining segment because remember, Singapore GRMs have surged to $30 a barrel from around $3.50 per barrel that we saw last week. So for every $1 per barrel increase in refinery margins, their EBITDA could increase by $500 million, which is around 2% of their EBITDA for FY27. But it all depends on how refining margins pan going ahead and if there are no windfall taxes on these margins. For airline companies, of course, it's a negative. Crude is a major raw material. For Interglobe Aviation, analysts suggest that earnings will contract by 13% for every $5 per barrel increase in Brent crude prices. Chemical sector, of course, that is impacted as well. A lot of them have crude-based derivatives, crude-based raw materials. Some of the companies, Coromandel International, GSFC, because of the gas prices hike, as it is also linked to crude oil prices. Deepak Nitrite, Atul Limited, Aarti Industries, that has benzene as a raw material, which is again crude-based. Paints company is again, crude is a big part of their raw material basket. So all these companies tend to be in focus on the back of this big surge that we're seeing in crude oil prices.
Sonal, thank you for summarizing that for us. Aviation, paints, tires, OMCs, all of them getting impacted because of the rise in oil prices, which are now at 110. There has been a slight cool off though from higher levels for Brent as we speak. So 21% higher now. At one point, both of them were up 27% each just a few minutes ago. And this is on the back of this Financial Times report, which is saying that the G7 nations are going to meet and discuss a joint release of emergency oil reserves. Of course, there is nothing concrete on this as of now, but the news itself has led to a bit of a cool off in crude oil prices, a subsequent recovery in Dow futures, and then a recovery on our own markets as well.